So good morning, everybody. Today is Friday, April 10th, 2015. It's 7:30 in the morning, New York time, London lunch. It's good to see you here at fxstreet.com. This is our weekly live Forex trading strategy session. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. I'm also the founder of FXBootcamp.com. And I've been doing live Forex trading webinars with FX Street for about 10 years, maybe 9 years. So I'm just getting warmed up. So good to see you. So today we can cover whatever you want. It's our hour of power. In fact, it's 75 minutes of haven. So we'll do technicals, we'll do fundamentals, whatever's on your mind. You're the boss. I am the humble currency trader, and we can work together. Forex, yep, we can cover those currency pairs. Would anybody like coverage of commodities? Right up here, what you see is an oil chart that we did several days ago when we were at the top gray zone. So pan on fire once. Yeah, some gold. It's funny, pan on fire and then mark fire. Cool. Brothers in arms, huh? Yeah, we can do some gold. Sure. How many people here are interested in binary options? I think it was Monday, I did 6 binary options trades in 45 minutes with the group at tradersway.com, and all 6 were profitable. Bada bing, bada boom. Some DAX, yen crosses, all that kind of stuff. Request to go over average stop loss. You know what? Let me address that one right now. I use a stop. Well, one main reason is to identify the risk-reward ratio and all that kind of stuff. You can't really figure out your risk if you don't know where your stop is. And of course, the other thing you need to know is your lot size, right? But really, it's there for a catastrophic, to protect me and my family from a catastrophic event. So very often, the stop loss is there in case I have a heart attack, fall on the floor, and die while I have a trade open. So that's the easy answer. Typically, what I'll do is place a stop based on my strategy for that trade. Example, if I'm doing a spot trade, in which I plan on being in the trade for a couple of hours, my stop is usually 50 pips. I don't do any more than, I don't eyeball it for, support and resistance and, higher highs and higher lows. It's not a price action play. It's just automatic. I go long, 50 pip stop. If I need more than that, then I'll need to cut my lot size in half and give myself 100. But really, if it's a spot trade, I don't need 100 pip stop, especially when the average daily range on most currency pairs are about 100, right? So that would be redonkulous. So when would that be appropriate? Oh, well, when I'm swing trading. And in a swing trade, I could be in more than a few hours, probably a couple of days, maybe longer if the trend really comes together, but then it just sort of turns into a position trade, right? And I'm building positions. In that case, I feel comfortable with 100 to 150 pip stops. So I'll do things like I'll analyze the entry, I'll analyze my support and resistance, right? I put my trade plan together, I enter it like any other trade, and then I just immediately do 150, 300 OCO. And just that's enough. Okay, but again, I'm going to be in it for a few days. So I could be wrong for one whole day and then it comes back in my favor. Typically not, but I could. And then as time goes by, I can manage it. I can move my stop, I can move my limit. But if I can't, you know, 150 pip stop, 300 pip limit should be good enough. If that's not good enough, then I need to work on my entry. Huh? Hoorah. All right, so we got that. Check. Oil. Yeah, let's do this. Since I'm on oil, we did this several days ago. The sell zone was here. We were just testing this gray zone at 53. Actually, it was 53 in some change, and then it came down. And then I was pretty blunt, you know, pretty blunt. But let me back out a little bit. And you can see, easy peasy lemon squeezy. Top, top, top. Yeah, guess what? It was resistance. All right, so not that big of a deal. Where are we now? Well, we're kind of in a support zone, but I don't want to buy it. Okay. If you were a bear, fib the drop, pull back, 382. It should come down to the 1618, which is back down to 48.5. Let's just say $48. Now, it went a little higher. It went to like 54. I believe our short was 53. Can anybody confirm that? When we typed this out, price was below 53, but we said sell at 53. We wrote this out and everything. Sell oil here. Anybody? Ken actually did it. That's right. Cool. Muy bien. Any questions here? I'm still a bear. My fundamentals are based on oil supply data, and bringing, let's say, normalizing relations with Iran only allows them to flood the market with, Iranian oil. So there's just a lot of oil. And my other thought is with the shale revolution, there's shale oil in a lot of places, not just Canada and the United States. There's a lot of places. So we got oil. We got oil. In fact, in the United States, in Cushing, Oklahoma, there's no more storage to put the stuff. Like, it comes out of the ground. We can't get it out of Oklahoma fast enough. It just, so you pump it into tanks, but there's no more tanks. I mean, we're going to have to start pumping it back into the ground. But actually what's happening is some people, speculators, when this thing drops down to like close to $40, what they're doing is they're buying the oil, putting it on a ship in the Gulf of Mexico, and it just sits in the ship. Yeah, they pay for the ship. Ships are not that expensive, especially if you're not burning anything, right? It's just anchored 2 miles offshore, and it just sits there. And it could sit there for 6 months to a year. Right? And why would they do that? It's a commodity trade. So it sits out there, they buy it at 40, and they're hoping it goes back up to 60, maybe $75, and they dump it. Yeah. So it's like, I don't think it's going to go that high. That's what I'm saying. Just a point here on oil, and then we'll move on.com. When, over the life cycle of 1 year, when do we hit peak oil? When is peak oil, meaning when does the United States of America have the most oil in storage? June 1st. All right, so typically there's a build up to June 1st, and then we start dwindling down supplies. So I think, and it's a guess, okay? I think we're going to have a lot of oil until June, and then we'll start hearing, in July and August, September, some of those inventories being drawn down. But the thing is, I think there's lots of oil, and if we don't have enough oil, it's really easy to replace those supplies. So one more comment, even though the last one was my last comment, one more last comment. Traditionally, if you were, let's say, in Saudi Arabia and you found some new oil under the sands, you say, okay, I'm going to pull this oil out. That process of building the infrastructure, when you start spending money, how long does it take you before you're putting oil into barrels and earning an income? The spread in time between spending money and earning money is 2 years. So, right? So you say, I want to start pulling this oil out of the ground. It's 2 years, and you're spending money all the while, right? If you're with shale oil, it's a technical revolution. And if you are now in, Alberta, southern Alberta, and you're like, hey, there's some oil on the ground, eh? And you want to pull that up, the spread in time from deciding to spend the money until you're putting oil into barrels and selling it to someone, cash flow in, versus, right? That's 30 days, not 700 days. So if we ever get low on supplies, someone in Saudi Arabia takes them 2 years. Someone in Canada or in the United States, or actually there's shale oil all over the place. So if we ever get low, 30 days later, boom, 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 more oil. What's the big deal? You want more oil? I got oil. I got the oil right here, huh? Right? It's no big deal. Very easy to get, very cheap to get. Big technical revolution here. So right now I'm selling rallies. A. What was that rate, A? C. Aye. All right, so that's that. On the bottom left is my gold chart. Does that make sense to you right here? You like my gold chart? Probably looks messy, doesn't it? Beep, beep. How's that? Is that better? Yeah. Yeah? Yeah. Yeah? Yeah. Yeah? Yeah. All right, so we're in a sell zone here. I think you can see my trade plan from yesterday when we were down here. What do you think? Looks like it tried. It went up to 112. Hey, it went up to 112. You think that was a psychological level? Yeah, 1,200. So anyways, boop, 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 back down. Okay, fine. I think I'm going to do the same. I think I would keep this below the 382. So let's change the time frame. Let's adjust the fractal here. I got to go out to my daily. Okay, red zone on the bottom. Way up here is the top. And you can see we have this large drop and a retracement. And so we've made a higher high up to about 50%, higher low, double top at the 50%, low, and I think we're going to make a lower high, lower low, back down to 1150, 1155. What do you think? Smell like a plan? So on a daily chart, let's make it simple. It went up to 50% retracement, and it's going to come down. Right now, I'm only saying 1155, but it should make a lower low. But as you know, this is not just pure technical analysis. Some people get emotional about gold, right? So the closer you get to 1100, the closer you are to 1000. The closer to 1000, the more people get psychological about it. But that's That's generally what I've got going on here. So I think it's going to take 2 weeks. And in 2 weeks, we're going to be down to 1155. If you disagree, I want to hear from you because I already know my opinion. Right? Hey, I might think it smells like roses, but you know, I love trading, man. If you can back your plan up with logical, you know, intelligent reasoning, I want to hear it, bro. What indicator maps supply and demand levels on your chart? Supply and demand levels. You mean the red and the green zone? Yeah, those are pivot points. Put them down on your things to do. There, you know, I think you could trade without any indicators whatsoever. You can have complete blank charts, not even a moving average. You could trade very well based on your own support and resistance lines from price action and then price action itself. Okay? I think that's all you really need. I think you should learn fundamentals. That doesn't necessarily put you into trade, but it helps you understand the trends and prepare for trends before they happen. Good. Then everything else is layered on. Well, one of the things I really don't like trading without are pivot points. I use daily, weekly, and monthly pivot points, and I look for clusters. Okay? Elliott Wave? No. I mean, I'm not an Elliott Wave technician. I've never taken a class in Elliott Wave. The idea, however, of a 5-wave sequence with a 3-wave correction, you know what? That makes a lot of sense. I really do believe the market behaves that way, generally speaking. And that the rest of Elliott Wave is changing the fractal, which is multiple time frames, which I also believe in. And then Fibonacci retracements. But you know what? I don't really care that much about Fibonacci retracements. It doesn't have to be Fibonacci. Like, for example, do you think your life would change dramatically if instead of using a 382, we used a 33? And instead of a 618, we used a 66? So basically, Wayne McDonell's retracement strategy is 1/3, 1/2, 2/3? Right? Do you think my trading would dramatically change because it's no longer Fibonacci? I mean, think about it, right? 1/3 retracement, half the distance retracement, 2/3 the distance retracement. I mean, come on, why do we make it so complicated and all these hocus pocus numbers, right? Oh, well, if you look at the sequence, right? 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, 233, 366. You're like, and then if you look at the ratio between those numbers, I'm like, dude, look, it just retraced 2/3. That's a lot. Right? I mean, come on. But whatever. So whatever works, guys, right? Whatever works. Elliott Wave, sure. Yeah, whatever you want. Here's probably the number one reason traders fail at trading. They don't make a decision. So then they either are just trading by the seat of their pants, they're just winging it. They're swinging both ways like a broken gate, throwing down trades all over the place. They're a mess. Right? Right? Any other reason? Right? No plan, no decision, don't know what they're doing, just winging it. So let's do this. I would take that person and say, spin the wheel of fortune and pick a strategy. Right? Just spin the wheel. Is it going to be Elliott Wave, right? Is it going to be pivot points? Is it going to be moving averages? Are you going to be a scalper, or a swing trader, position trader? Like, just as long as it lands somewhere, just like pick something and master it. Make a decision, for crying out loud. Are you a bull or a bear? Most amateur traders, they don't know. Well, guess what? That's why you fail. Right? I mean, I don't know how you can put a trade plan together if A, you don't know if you're a bull or a bear, or B, you don't have a consistent strategy. Well, you're just a mess. Right? But like one professional trader said many, many, many years ago, you know, retail traders are liquidity events. It's harsh, but not untrue. So have a plan. I don't care what your strategy is, right? I don't even care if you're a bull or a bear. I'll sit and listen, but I've already made my decision. So, and I'll be fascinated in what you have to say, even if I disagree. And you'll probably make money, and I'll probably make money, right? So you got to be a bull, a bear, or a pig, right? You're either a bull, a bear, or a pig. Bulls buy, bears sell. What happens to pigs? Pigs get slaughtered. Yeah. So anyways, stock market, this is what we did. I think this was non-farm payrolls. Anybody attend non-farm payrolls 1 week ago? I believe this is how we ended it. And this is the S&P 500. And sure enough, it's moving along. You can see the logic here. We're at support. Fine. If it went, by the way, if it went lower than this lowest gray zone, long ways down for the stock market. But you know what? Very few people benefit when the stock market falls. Very few people benefit. So everybody wants to go up at that point. Also, there's a lot of portfolio managers that need to buy when price goes down because they don't buy at the top like a retail trader does, right? They can't buy unless it comes down let's say 5 or 6%. Then they buy. And why does the stock market fall? Well, you know, CNBC likes to hype it up, but if you actually pay attention, it falls at very logical times, right? Like right before the end of the quarter. Well, why does it do that? Well, portfolio managers are taking profit on their best trades. They're cashing out of their the worst trades. And they're also doing something called rebalancing, which means under their own rules and guidelines and disclosure documents to clients, they'll say things like, you know, we have a diversified portfolio, right? And we hold no more than 5% of any stock, so that therefore you'll always be diversified. All right, so, well, at the end of the quarter, well, remember, they're going to have to report, right? It goes in the annual report and stuff, and they're going to have to do quarterly reports. And they're going to have to report, well, how much of each company have they invested into? Well, if a company has jumped 12% in price over the course of 3 or 6 months, suddenly, dollar-wise, because the price of the stock went up, they hold too much of the stock. Now, they might own the same number of shares, but the price per share has gone up, and now they might be holding, I don't know, 7% of Google or something, right? So what happens? Portfolio manager needs to rebalance. This is normal. If you work for a fund or a wealth management team or something like that, it's a typical job. Someone actually sits there and has to rebalance. And what that means is log into the account, go to the Google stock, calculate how much you need to max out at your 5%, find out that you have 200 shares too many, sell the 200 shares, go to cash. So what happens is the stock market comes down. Well, what about the other portfolio managers that say, man, I haven't been in Google for a while? And then they see Google's come down 5% because a lot of the traders are holding it in the secondary market. Now they're getting out for profit. Some other guy comes along and says, time for me to pick up some Google stock because it's down 5%. And it goes back up. And so a lot of what you see, guys, is this down and up and down and up. If you overlapped it with like quarters and stuff like that, right, you'd be shocked how logical and intelligent the market is and at the zones of which they very often buy or sell. Even though they would laugh at you if you said you use technical analysis, it gets done. So anyways, we're at support. If it went any lower than that, almost everyone's going to lose a lot of money. So nobody wants to do that. But again, the only reason it's really down is, some rebalancing, end of quarter, profit taking, blah, 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 blah. So someone's going to buy it up. And sure enough, they bought it, went up to resistance, consolidated. You can see we drew this nice arrow. We get NFP out of the way. Everything's good. Green light to go and off to the next, right? Off to the next up. Okay. And right now it's looking good. We're riding a 5, which is the most aggressive you can get. Right? Up, 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 down, down, up, 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 up. Right? So anyways, it's just moving right along. It feels good. Feels good. Feels good. But we're going to have a problem up in here. Okay. This weird triangle wedge thing, you're probably looking at it and saying, it doesn't seem to mean anything, Wayne. I drew it a day or two ago, and it just was to indicate this top to this top, and that it would break out and come up to the next level of resistance. So it's a weird way of me saying that's where price is going to be in the future. And that's when we're down here with this arrow. Well, now it seems to be riding up that wedge. But I drew the wedge yesterday or something like that, maybe even the day before. So lucky. So that's that. That's the S&P 500. Feels good. Feels good. Somebody asked for DAX. Let's see how complicated DAX is. When did the ECB announce quantitative easing? Does anybody have a date? What was it, like March 15th? No, it wasn't that far back, was it? Boy. No, it wasn't the January meeting, right? They can't do anything that early in the year. Anybody else? March 6th? That seems better. Anybody confirm that? Thank you, Ernestus. So about March. Is that right? Really? January? March 9th? So when was that? So about, oh, come on, Bubba. I don't know, somewhere in here, right? Oh, gee, did it not draw again? I don't know, somewhere in here, right? Okay, others are saying announced. It's so funny, it's so blurry, but all right, let's just, let's say in here then. So DAX goes up for, let me make this as complicated as I possibly can. One, quantitative easing is designed to increase asset prices. So there's asset prices going up in Europe. And I like to call this type of rally a free money rally. Believe it or not, companies love free money. So, yeah, I have nothing more to say about that. But I don't know. I mean, you buy when there's quantitative easing. That's it. Okay, that's it. I mean, I don't know, right? I mean, honestly, that's what it's designed to do. So if you're a European, you should have plowed your money into the stock market. Yeah. Yeah, I'm studying finance and banking at Harvard, and we had class the other day, and they were saying in 1800, if you had $1 and you put it into gold, right now you would have $6,000. If you had $1 in 1800, yeah, that's a while ago, right? And you put it into bonds, you would have $16,000. Okay, if in 1800 you bought $1 worth of the U.S. stock market, you would have 9 million. How's class going? I screwed up my midterm, so my grade point average dropped to 93%. And but so I contacted the professor, and I'm like, I knew everything you taught. I studied hard, man. And I had all these, but then the last 3 questions were just crazy, just crazy ridiculous. And he's like, yeah, they're Harvard questions. I'm like, but you said the test would be on things you covered. You didn't cover any of that in class. In fact, it's kind of opposite of everything you taught. I mean, and I had like 4 minutes to go through and answer all these questions. I mean, I didn't even have enough time to read the question. Yep. But anyways, I'm the top of my class. Yay! I'm not number 1, but I'm an A student. So anyways, it's fine. It's fine. Fascinating, though. Fascinating stuff. Has nothing to do with currency trading, but we're learning about the underwriting process for taking companies public. What else are you going to do with your free time, right? That's what I do instead of watch TV. I underwrite stocks. All right, so here we go. Piggy, piggy, piggy on the way down. Still no good news out of the Bank of England, right? So we're really disappointed on that. The next thing that could possibly support the British pound would be April 16th, and the World Economic Report comes out by the IMF. If they give a thumbs up for the UK economy, but I'm starting to feel like that's hard to believe. And maybe Carney was wrong, or maybe Carney's too early. But he told us that, yeah, deflation, yeah. But there is inflation in the economy. It's just being depressed by oil prices. Well, that's what he said, but we're not getting any good news out of the UK, right? Yeah, so right now it's just, down. So the Bank of England's news this week was the only thing really for a while that had the potential of supporting the British pound, but it's dead in the water now. It's dead. So now maybe the 16th of April, the IMF report comes out good, but I'm having trouble believing that, right? So I think I'm going to end my week like this for next week's strategy. So, I don't know, a little bounce here on Friday on the weekly pivots, then maybe back on, and then Monday or Tuesday we dump it and we're on our way down to 175. Okay? That's pound versus yen. That's not even the good one. So we'll do pound dollar in a second. And then I propose if we can squeeze that, we make some binary options trades. How would that make you feel emotionally? Want to do some live trading? So this is a Euro USD, and we're just chugging along here, doing everything we're supposed to be doing. Nothing too complicated. We're at a support zone. Okay. We're just breaching 106. Well, it's one of these things where I can't sell and I don't want to buy. Why can't I sell? Yeah, we're at 106 or yeah, 106,000, and it's a weekly S2 pivot point. You know, I'm just not in a business of selling at support, right? So can't really do that. I mean, what do we do? Throw down a binary? But why? Is it that good? Is that a good opportunity? Even with, even scalping, it's not that good of an opportunity. No, notice as a scalper, you can see 21 drops below the 55, you're a bear. Down, 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 up, up. Sell. Down, 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 up, up. At this time, however, the 21 would have been way up here at that time, so that's a little tricky. That's why I kind of hung around, waited for the second touch, waited for the 21 to kick in. Finally kicks in, down, 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 up, up to the 21. You would have sold in there, right? Another way of doing it, okay, sell this 5A cross, sell this 5A cross, sell this 5A cross, and you would sell that, but we're maybe running out of room here. We'll see. Okay. Yeah, it looks like it's moving just fine. So, anyways, I mean, it's real easy selling. The only problem is, this isn't a good zone for me. Okay. You can see, yeah, the daily S1. That's why it's clustered in here, the daily S1. But then that support became resistance. So, yeah, you know what? I don't even want to throw a binary on that. It just seems like degenerate gambling. So let's move on. See if you can figure out my trade plan. Seems like it was up, down, up. Oh, look, it did that. Cool. Now what? Well, we kind of have a problem here. Roger that. We're at resistance. But this is a 5-minute chart. Now, let me get out my crystal ball. What I would like to see is this. And I might throw a binary down for that one, just because it's fun. Check the 15. Oh, yeah, we're late, too. We're late there. See, someone's going to sell that because of the pivot point. It's also a midpoint psych level, 120.50. But I believe when we talked about it at the beginning of this trade, I think we said next week, don't be shocked if we're at 125 next week. Can anybody confirm that? Daniel says, yeah. Yeah, I thought it was something like that, right? In at 19, something like that, but just kind of jamming, just... Yeah, it's just, but there's a lot of hoping and praying on that. It had to do with fiscal year end for Japan was April 1st. or actually technically March 31st, right? So now that we got that out of the way, the potential here is the weak Japanese yen, right? So here's the move. Basically, let's call it a bottom at 19. It went a little lower, but whatever. Let's say 19 up to 20, right? 1950, 2050, now basically 20, and slowly working its way up, right? So it's moving like 100 pips up, 50 pips down, 100 pips up, 50 pips down. That sounds like higher highs and higher lows. And we were just kind of working our way here. So this 50% says somewhere between the 382 and 618. So this one basically says we're on our way to 121. And then I'm thinking next week's pivots will allow this to go a little higher. Something like that. I mean, I don't think 125 is going to happen that quickly, but it's sort of the attitude. I'm certainly not selling it, right? So go back into the 5-minute chart here. Would rather be a bull than a bear. I know. Hang on. Okay, I'd rather be a bull than a bear. I think this could come down, though. We got that 15-minute ready to cycle down, but the hour up just seems like a bad trade right now. I might try it anyways. Let me look at it on my different PC. Daily up, 4-hour wants to come down. Hourly, good to go. Yeah, 15-minute burnout. Yeah, this is just not another not so good trade setup. Sorry, guys. But, you know, like if I was a bear, I would sell this. Look at the price action. Resistance, 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 right? It's a pivot point. It's a midpoint psych level. 15 minutes ready to drop. And by that, I use oscillators, so I go to the 15-minute, right? 15 minutes certainly could roll over if price on the 5-minute rolled over. Well, does price on the 5-minute want to roll over? Certainly could, right? If this came down, 15 minutes is going to come down, which means it's going to fall for 2 hours, which means it's not even going to head up until 10 o'clock in the morning. So it would be like I almost need it to retrace to the monthly central before I buy it back. You know, so I'm like, we might not even have a decent enough market at the moment to even scalp with binaries. It'd just be gambling. Right? Let's go to Kitty Cad. See if you can figure out what our trading strategy has been on this thing for the last couple of weeks. Right? I mean, sometimes the fish jump into the canoe, right? So, yeah, that's the USD CAD, and guess what? It's moving up. And then when it gets up to the red zone, it might move down. Did the CAD news come out yet, or is that in a few? I don't. You know, what is it? Almost 8:30. Hang on. And I just love your Jersey ways. I thought I had. Hang on. Let me get the news. Trade the news.com. All right. Yeah, so yeah, we got CAD news today, right? Baltic Dry Index is so terrible, man. Yeah. So yeah, the CAD jobs report's coming out, right? But anyways, it's Oscar Mike. It's on the move up to the resistance. It's fine. I mean, what do you want to do? Did you want to scalp with a binary or something? Like, I don't know, man. Maybe take the dollar out of it, do like a CAD yen? Nah, let's do a USD CAD. I might be too late. Do you think the number is going to be good? I think it's going to be bad. What's your opinion? What do you think, guys? Yeah. So do you think it'll be good for the Canadian dollar? I suppose the good part would be the surprise. What if it's not as bad? So if you're going to trade a binary, it looks like this. Okay. They have a clock here because you need to know when it expires. So I have it set on USD CAD. You think it's going to go up? You put a call. If you think it's going to go down, it's a put. This is when it expires. So it expires, it's 12:18. So it expires in just a few minutes, right? Or you can say, at 12:45. So just about a half an hour from now, you could say price will be higher or price will be lower. Now, the minimum you can trade is $25, okay, with an 80% return. That might be too much for some people, but you can scalp. So somebody asked how I trade. Well, with binaries, I like to use binaries to hedge my long-term cash positions, but it's also a very fun way to scalp. And the way you do that is you go to the 60-second tab, and you can change it. You can do the 300, which is a 5-minute trade, 300 seconds. And that allows you to trade $5 as a minimum. So it's a true little scalpy scalp. So that's the time frame, right, Joshua? That's the whole time frame. Well, it depends on what I'm doing. So if I'm actually scalping, I could be in the trade for 5 minutes and risk a little bit. I risk $5, but it pays me $8.80. It's fine. I mean, obviously you can put more than that. But if you're just scalping along, right, the minimum is much smaller. What I tend to prefer is I just go to a regular binary. Okay, I just go to a regular old binary and just have it expire like within a half an hour. That's my typical MO, somewhere between 15 minutes and a half an hour. Okay. So this one would be much more typical. I think I have a option expiring today, though. Let me double check. Hang on, nothing open at the moment. I thought I did, though. Oh, it's under long term, I bet. Hang on. Yeah, I'm long. Oops, I'm long USD CAD at 124.80, and it expires at the end of trading today. Oops. All right, so I'm already long at 24.80. Oh snap, we're at 26.50. Called it. So that was easy. Now, what did I do? What was my trade plan? I bought at support. Yeah, but besides that, well, what else is there? Right? I mean, that's it. I mean, remember the red zone at the top and the red zone at the bottom? Yeah, I just carried out the trade plan we did together on our strategy session. Right? Must be that crystal ball. So I think I might do all right. It depends. If the news is amazing today, maybe that 200 pips isn't enough, but I think I'll be fine. So anyways, net change expected to be, let me get some data here on the news. Well, last month it was 34, right? Is that right? Did I get that right? They're expecting the unemployment rate to go up. That can't be that good, huh? Look at this. Royal Bank of Canada cutting UK GDP. Yep, everybody's getting on the clue train. There's blood in the water for the British pound. So anyway, so we're looks like it's the end of the at the bottom of the hour. We'll get that news, so we'll pay attention to that. But yeah, the big the big trade I bought at support. Right? So we'll go back. So I bought at 24.80, right? Look at 24.80 was right here. I bought right there, guys. Oh, that's my red zone. A bouncing cable from weekly pivot point was a possibility, sure. What would, oh, well, yeah, it's not a target. I'm just saying it's a supportive pivot point. When did I buy it? I think it was Monday or something. I don't think it tells me. Hang on. It was Monday or Tuesday. Start time 7:04:15. So start time. Oh, April 7th. Sorry, April 7th. 3 days ago? Yeah. No, it was, look, 3 days ago, we were at support. I mean, right? I don't know, right? Yeah. I don't know. That's what we do, right? That's our job, right? Buy at support, sell at resistance. What could be a target to get in front of the? Well, but see, you have to understand, it's not necessarily a trade. Okay, okay, Jenny. It's not necessarily a trade. You could buy. And by the way, was it pound dollar or pound yen? See, the pound yen would be up to resistance and then down. But sometimes you have to understand, like, not selling doesn't mean buying. My biggest concern is I can't sell it here. That's so to me that's defined, right? I can't sell it there. But because of that, maybe other people see it. Maybe the bears that are selling it for profit, maybe they start taking their profit and so on and so forth. Maybe some scalpers buy it off of the S2. That's fine. I might just leave it till we go back up to 77.50 and then I'll dump it. That might be Tuesday, right? So we can go to the cable now. And it's not necessarily a buy. And if you did buy it, it would have to be a shorter term trade because you're ignoring all the fundamentals and all the technicals. So you couldn't possibly be right for very long, but you could be right for a little while. So what's the target? I don't know. Where do you see previous support? Because that's likely your current resistance. And why is it bouncing at this particular area? Is it a pivot? Is it a psych level? Is it, I mean, all right. So it all kind of depends. So let's back out here. You know, so you want to buy it, is what you're telling me. I don't know if I can even get my brain around that concept. I don't know. I don't know if I could do it. I guess. I guess either to the midpoint cycle level or up to the next red zone. But see, I have trouble answering it because I couldn't possibly do it. So, right? I don't know. I think it's like that. I don't think I could buy it. So it's hard for me to come up with the target. But I guess midpoint cycle level would be logical, or even higher up here at the cycle level. So 46.50 and maybe 47. But to make sure you understand, I would rather sell it at 46.50 or I would rather sell it at 47. I could participate in having it go up to 46.50 or 47, but it's twice the risk for half the reward. So I tend to just go find something else to do. You know, buying at 120 Euro USD, or I mean a USD yen, you know, maybe. Right. I see a lot of our time frames are mixed up right now. So there's a lot of charts that medium term say up, short term say down, or vice versa, and it might just, you know, maybe it'll be later in the day. Hang on, we got it. 28? Yeah, 28. 28's the number. The number is 28. USD CAD coming down. So it not nearly as bad as it could have been is good news for the Canadian dollar. Did you want to scalp now? What do you think, eh? Oh, come on, charts. I got too many things going on here. Come on. My PC's really slow. I got 900 things going on right now. It's okay. There it is. Finally, a little slow, but there we are. This should be. Let's do it as a 1 minute. So, what do you want to do now? Do you want to sell a bounce up? Maybe in here, maybe around the M3. 50 is probably too high. You got a plan, Stan? Yeah, and that's where the risk was, though, Adam, where like everyone was expecting bad news, and a lot of that would have been priced in already, and it wasn't that bad. Last month was 34, this month was 28. Hey, it could have been minus 10. Canada's like that. They go plus and minus, right? How do you catch 21? Yeah, you got to fire in front of it, right? The question is, how do you catch a 21 or the 5 on a bounce? Yeah, they're moving, right? So you're right. So you got to fire in front of it. Now, some might buy this low because they want it to go up. Others are going to scalp it. So I think a medium-term trader would want to buy this low, and a shorter-term trader is going to want to sell this high. I think we can, excuse me, maybe, what do you guys, how many people would like to scalp this short in the next 5 minutes? For a very short amount of time, for like 5 minutes, right? Anybody? If you're just going to be like a 5 minute trader, like I said, you can go to 60 seconds. You can make it 300 seconds. Changes to USD CAD. Okay, whopping $5, and now you wait till you get your price. So we're at a 382. Where would you like to sell this, guys? 382, 50% or 618? Or sorry, 33, 50 or 66? We'll use Wayne retracements. Well, that would be a 33. You look at you guys, anywhere in there will do. Wow. Did you just say that? Yeah. All right. Well, we only got we only have a few minutes left in class, right? So for USD CAD, 300 seconds, $5. Adam says anywhere around here is good enough. So we'll do that. Okay. You notice here, that's the trade. It's now on my MT4 account. Okay. Here, let me change this to a binary chart just so what was it? USD CAD? USD CAD BO, binary option. So you can do it like that. Might be easier to see. Let me clean that up. So there's our trade. We're short at about the 382 Fibonacci retracement. And when does it expire? It expires in 256 seconds. It's so funny. Adam, anywhere here will do. That's so funny. Right? Just kick down the door and shoot anything that walks. Okay. So, yeah, 50% to 618 is a much more disciplined entry. Because remember, if you're like I said, if you're a medium term trader, you want to buy it low. If you're a short term trader, you want to sell this high. 382 is pretty aggressive. Excuse me. So let's review this. Right after the news, you'll notice that it dropped and then rose and then dropped again. If you're going to be aggressive, that's where you'd be aggressive in the first 1 minute. After that, I tend to see when I'm scalping news is that then you go through a 5-minute cycle. So the next one really could be up for another 10 or 15 minutes, and then it heads down. If it's going to head down at all. Because there just might be so many people buying it here that it just gets overwhelmed, right? Does anybody think 26,000,000,000,000,000,000,000,000 is possibly your psychological level? Yeah, and that's kind of where if you're going to have that attitude like, well, anywhere around 26, if I get it at 2602, good enough, right? But on sort of a retracement like this, bouncing off of a clear support, being aggressive, like, 382, good enough, anywhere around there is fine. Not quite the right, no, not there. Not for that, that kind of loosey-goosey entry. You should say, well, we just kicked off 26,000, very important psych level. The move, or let's say the prevailing trend in this trade is up, not down. So you should you should hope for the higher, not right. Make sense? But look, I wanted to get a binary in there, right? So because we only had 500 seconds left, so a 300-second binary sounded like an interesting thing to do. Okay. So anyways, we're down to 87 seconds. 51 seconds, and it's going the wrong way. Yeah, totally. Yeah, I kind of like this area a little bit better for scalping. Kind of like the moving averages kind of represent something. The 618, but whatever. Adam, yeah. Or you know, or or you're in the trade a longer term, right, Adam? If you're just like, oh man, this is what I was looking for. But you know, like if we had that red zone, I'm gonna lose the $5. Okay, validated. Boom, lost $5. Thanks a lot, Adam. But look, there's 2 minutes left in class, so at least we got a binary option in there, and you can see if you play it right, though, this is really a fairly good opportunity to scalp. So like, because you know the nice thing with the binary is you don't have to have risk management, right? You know, or trade management, right? So let's say and you can see it's behaving better at this higher price. So let's leave one like this. You know, this one's going to expire. Man, it's going to take more time to explain it. So in our last 1 minute, you could do it like this. It's 12:42, right? You could do 12:45. I can't catch that anymore. All right, so let's go to the next one. 1300 is the newest one. So at the top of the hour, okay, let's try this and see if it's easier. Obviously, we're not going to be able to stay and do this together, but how about this? USD CAD at the top of the hour in 18 minutes will be, how about less than now? You can do it that way. It's a little more money. I mean, $25. Come on. But now I'm in it for 20 minutes, and you take, you know, the longer you're in it, the less you take, you know, the more the volatility is taken out, right? You see what I mean? Like on a multi-day trade, there's almost like, obviously there's no risk management, and if you give yourself enough time, if you truly bought at hardcore support, you know, over time, whether, you know, it should go up. Now, is it going to go up in the next 3 minutes? Well, that's hard to say. In the next 3 hours? Yeah, probably. In the next 30 hours? Most definitely, right? And that's so the longer you give yourself, the more likely your technical analysis will come to fruition. So in this case, the trade is becoming profitable already. And, you know, as long as it's down in the next 15 minutes, we'll be okay. Moderator, do we have to shut the room down, or is this someone else gonna, or can we stay in this for another 15 minutes if people want to? Well, it's up to the moderator. They're our host. I'm just suggesting if we don't have to get kicked out. Oh, we can stay? Thank you, admin. Thank you. If you guys want to stay, I guess we're done. It's been 75 minutes. But if you want to stay and watch this this binary, it expires at the top of the hour, so in 14 minutes and 38 seconds. Yeah, we'll just let it run. And while we let it run, I can answer questions. Remember, I want to do whatever I can to help. And we'll just let this play out. Cable, I've done twice now. I kind of don't want to do it again. Sorry. There's no trade there for me, so I can't say it more than twice. Review gold. That was like the first thing we did. All right, so I got another question. Wow. How do you catch the 21 or the 5 pounds? I thought I answered that one. You trade in front of it because it's a moving average, which means it's moving. So like if you're trying to shoot a deer while it's running, you don't shoot at the deer, you shoot in front of it. And the deer runs into the bullet, basically, right? And the moving averages are similar, especially on longer term time frames. Like, I don't know, let's even just pick an hour. Very often you don't actually touch the moving EMA. Okay, you get close to the moving average, then you long, and then when you get a new candle, it moves up. It catches up, right? In this case, that was a good buy right there at 26,000. Very good buy. Goodbye. Okay. What are the EMAs? Great question. There is a video on FX Street. I give a 2-hour workshop on my chart setup and my trading strategy. So if you look on FX Street, it may even be on the registration page. It's there. I believe it's called Strategic and Tactical Forex Trading. But a quick breakdown. The 21 and 55, right? The orange and red, or sorry, the orange and blue, that represents market. Okay? 21.55. The red and black lines, they're the 5 and the 8. And that represents price action. And my theory is to always separate the market from price and trade when they're congruent. That's the whole, the sum of my book in 10 seconds, right? Oh, cool. The timing sessions. Right on. I appreciate that. General question, Wayne. What percentage profit per year is normal for a good trader? A professional trader earns somewhere between 0 and, let's say, maximum 3% per month. By the way, thank you, admin, very much. I really appreciate that. There's the link, guys, for that 2-hour workshop. All right. So that if you're a professional trader, you average somewhere between 0 and 3% per month. That is approximately 50% per year if you average 3% a month. But obviously, you're not going to average 3% a month if that, I mean, that would be outside. Now, retail traders are under more pressure to make money because obviously they're not charging a management fee and stuff, right? So I think if you were trying to get somewhere between 3 and 6% return per month, that means you double your money every year. I think if you're going beyond that, if you're trying to get 10 or 20% per month, you're way over leveraged, and you might have a good month this month, and you might have a good month next month, but you're going to blow up your trade account. And it's only cliche, and it's only cliche for a reason. Okay? So is that a better, I hope that addresses your question in a logical and intelligent way, right? Because, like, what is normal and what's a good trader? Well, all that's definition. So I think if you're doing, because, I had someone, essentially calling me out saying that he was a better trader than me. And I'm like, well, the market wasn't very good last month, so I didn't get much. He's like, oh, well, I've doubled my account 3 times in the last, 90 days or something. I'm like, Oh, well, good for you. That sounds horrible, in my opinion. Anyone that tells me they've doubled and their account in a short order, especially someone that's done it 2 or 3 times, I'm like, wow, that sounds terrible. But then you have to sit down and say, well, this is risk, and we're looking at long term, and then how do but not everyone sees eye to eye on that, and they're just like, wow, they just maybe it's just experience or something, right? But that's too much, man. I'm happy that they've made all that money, but I mean, how many times have I seen people make all that money and then inevitably lose it, right? So again, so let's not compare that way. So what can we compare with? We can compare to those that are long-term, successful professional traders working for institutional investors, and the best of the best of the best are averaging 2% a month. So if some guy is averaging 100% a month, I'm saying, well, you know what? You might be using a little more leverage than a professional trader. And if you brought that to an institution and say, hey, man, I get 300% every 6 weeks. I doubled the account every 6 weeks. Will you invest $10 million with me? They couldn't possibly stop laughing and say, are you crazy? Because we can't invest in that. Right? So, but obviously we're not talking about you as an institutional investor. So what would be more reasonable? Well, if you used 3 times more leverage than a professional, are you okay with 300% more leverage than a professional? Yeah, well, if it leads to, 50 to 100% return in a year, I suppose that's good, because we know you need to make money, you need to grow your account size, you're probably underfunded. Okay? And that you're under, you got to make money, right? So you're going to have to take a little more risk. Plus, it's nice when you're earning, let's say, a 2% management fee, and you have $100 million under management. So how would you like to just know you're guaranteed $2 million in revenue? Guaranteed $2 million, no matter what happens. And then if you do well, you're going to collect 20% of the profits. That's a standard 220 deal, right? You're like, okay, well, you can live with that, right? But what do you do if you got, 10 grand? How much is in your account, right? 10 grand? 5 grand? 3 grand? All right, fine. But, what are you trying to do now? If you ever want to be a professional trader, then you should be focused not just on making money, but really trade management, risk management, portfolio management, developing a track record of success. So again, if you only have 3 grand in your account, but you want to be a professional trader one day, don't even have this idea that you need to turn your 3 grand into 12 grand and then money is going to, fly in your direction. They're going to run from you. They're not going to be attracted to your incredible risk taking. Because when you talk to somebody with money, they don't want your risk. Look, you're willing to risk it because it's 3 grand, and if you lose your 3 grand, your life's not going to change. Right? But, lose 3 million for somebody, they're upset. Right? And you'll end up being buried somewhere between Dubai and Abu Dhabi in the sand dunes. Not good. Okay, so lower the risk. Another way to make more money, now listen to this, guys. Another way to make more money is to pay yourself less. This is a page out of my book. I actually found this. We were talking about this just maybe a day or two ago, where I did a 3-year business plan with pro forma cash flow statements and projections. And I learned a lot. I learned about minimal acceptable performance for my trades. I learned about having a long-term focus and not taking risk on each and any trade or a particular day. Today didn't matter. Tomorrow didn't matter on the long run, right? And one other thing that I discovered, which was very interesting, because I looked at the cash flow projections, and I tweaked a lot of the variables. One of the things I found is if, let's say, I paid myself 50% of my profits every month and put 50% back into my trade account, that's pretty good, right? Because the trade account grows. And I got to eat, I got to pay my rent. Well, I didn't have rent. I had to pay my mortgage and all that kind of stuff, right? But I found out that if I paid myself 20% per month and put 80% back into my trade account, at the end of the year, I made more money. Because the account size grows and the lot size stayed the same in proportion to the account size, so at the end of the year, I was trading larger lot sizes, but not more risk relative to the account size. So in the beginning, let's say you're making $100 a day, and if you paid yourself 50% and put 50% back in, well, you're right. Now you got that money you're giving yourself. The rest goes to the trading account. And at the end of the year, let's say you're making $500 a day. Well, if you paid yourself 20%, at the end of the year, you're paying yourself $1,500 a day, right? So paying yourself less money, you ended up earning more because more went to your account size. Your account size grew more. So the less you pay yourself in the beginning, the more you're going to make down the road, and it's very significant difference. Mark asked about my traditional lot size. It depends. Over the years, I've done a lot of institutional trading, so I have been in situations where I have more than 100 trades open at one time. But I can also tell you I had 95% of my margin available for more trades. So I had 100 trades open, and I was using almost no leverage. Okay, hang on. Okay, guys, this one I put more money on, a whopping $25. On Adam's trade of, yeah, this is good enough, I only put $5. 24 seconds, guys. There you go, Adam. 17 seconds. This is the trade here. I'm short US dollar CAD at this price. I invested $25 and it will pay me $45. And it should be closing in 1 second. Boom. So we can go now to the expired options, and it should be in my history. And wait. 111. Why are they winners? Where did it go? Oh, it's probably under here. No, it wasn't a 67. Hang on, where is it? Where did it go? It's not a 60-second trade. All right, so there's the one we did with Adam's permission. So where's mine? Oh, there it is. It just didn't update yet. All right, USD CAD, a put, the strike rate 126.27, expiration 126.12. I was in it for 18 minutes, turned $25 into $45. What do you think? So it's an interesting way to scalp, isn't it? Don't you think? I think it's an interesting way to scalp because there's no volatility involved, especially right after news. Because let's say you shorted and it went up 50 pips and then came down. It wouldn't matter to you with the binary option because it either worth more than you paid or it expires worthless. So, I mean, it's all sort of built in, right? There's no risk management. There's no moving stops. There's no stop placement questions. It's just you're either right or you're wrong, and that's why it's called binary. So it's either going to expire worthless, right, or you're going to make money. And now, one interesting thing with scalping too. Let's say you use the cash market and you sold at resistance, and it fell over the course of a half an hour. It fell 9 pips. Well, you're going to get paid for 9 pips, right? Minus your spread, right? In this case, if it fell 9 pips and you used a binary option, you would have been paid the full 25 pips, even though it was only up 9 pips at best. You would have been paid for the full 25, even though it only went 9. Well, that's nice because we know when you're scalping, very often there's a little bit of slippage, or you don't get out at the exact top or bottom, it doesn't quite get there. So, it might move, let's say moves 15 pips, but as a scalper, you might only get 10 of the pips, right? But in a binary option, it's just going to pay you for the full thing and then just move on. So anyways, thank you to FX Street for being wonderful hosts. I think it's about my 120th webinar at FX Street, and I love it. I do these events every single day at tradersway.com as well. So if you want to hang out with me Monday, Tuesday, Wednesday, and Thursday, I'm at tradersway.com. At 7:30 in the morning, New York time, London lunch. And then I'm here at FX Street every Friday at 7:30 in the morning, London lunch. So I'm here every single day for you, free of charge. And I don't have anything to sell you. I don't have a training course. I don't have a live webinar room that costs $200 a month. I don't have a DVD. So I'm just here to help, and I hope I helped. I love hanging with you guys. Peace on earth. May the pips be with you. May your profits be above average. And I hope you have a really fantastic weekend.